Good morning out there, traders. It is December 19th, 2023, and welcome to the Apteros DMI for today. We're going to be going through our recap as usual and then updating our levels for the current session with the ES market here. So, just taking a look at what was going on yesterday, it was a pretty straightforward plan. We had two lines in the sand, looking at scenario one being bullish above, and that was really the main scenario that played out during the session. One of the key components that I mentioned in yesterday's DMI is how we were going to react around this 47.78 area. And I had mentioned if we held above it early in the session, I thought that the particular day could end up trending toward this upper target at the 48.03 zone. And that is essentially exactly what we ended up seeing. So it was scenario one for sure for the entirety of the session, and with the extra little nuance here around this neutral area and holding above it around that 47.78s, we got pretty much exactly what we planned for, a continuation to the upside for the bulls into that 48.03 zone. Now, we didn't quite tag it. We got a couple of ticks before it, looks like about a point or so before the 48.03s, but that's close enough for us whenever it comes to targeting. So we ended up actually tagging that 48.03 overnight here and coming into today's session. So that's kind of where we're currently sitting. Let's update our levels for today and take a look at what's going on. Okay, so here we are for today. A very similar layout to what we've been having for the last week or so. We have two lines in the sand. However, I'm going to add a little bit more color around this upper line in the sand. This upper line in the sand really, for me, is kind of the main driver for what's going on today. So this is going to be my main line in the sand overall. Scenario one is going to be that we remain bullish up above that line in the sand and continue to the upside, using these neutral areas as inflection points possible for targeting and continuation. So what we're essentially seeing here is now that we've reached this destination at the 48.03s, what could possibly happen here is we could see a pullback into our line in the sand. If that does manifest itself, especially early in the session, it's one of those things where, yes, you could kind of follow that pressure back into our line in the sand, but it's very low level in terms of context and opportunity. We're really just trying to follow the context and the bias, and we've been doing a pretty good job of it over the last 4 or 5 weeks. So let's just stick with what's, really working here for us, and that is context. So if we do get this pullback, the main idea here, scenario one, is that we hold that line in the sand and continue to the upside. That would be a continuation up into here, here, or here. Now, if it does not happen that way, in other words, we don't get that pullback, what we'd actually see here is a break to the upside, then a pullback, and then a continuation up into that 48.20. And that would kind of be essentially the way that scenario one can kind of happen from where price currently is here as we're looking at the DMI. Now, that's just a general plan. The overall idea is to stick with the bullish side of things, and we'll be focusing on this particular opportunity or this particular opportunity with scenario one. Now, taking a look at the rest of the session and the other things that could play out today, if we get scenario one and it breaks down, or we get that pullback into this line in the sand, we break down, we end up seeing something like this where we accept down below and we continue to the downside here. That would be scenario two from that upper line in the sand. Then we'd be looking for that 47.62 target. This is a decent scalping opportunity to the downside for the bears. We would start to see some of our lower level timeframes be shifting in the favor of the bears, and we'd start to see a return back into some value that we've been building for a little bit of time here. So scenario two, not a bad opportunity to the downside, especially looking for that 47.62 mark, and then any continuation from there down into our lower line in the sand. From there, it's the same kind of plan we've had, over the last couple of weeks where we have two lines in the sand, right? We have that lower line in the sand now with scenario three, where we could possibly see that inflection turn. Pretty quick neutral reference up above there for, an early scaling opportunity, but then a continuation possible up into that upper line in the sand there for scenario three. So that's really what we're paying attention to from our main scenarios there. And then, of course, our alternate scenario, if things really get extended and continue to push down, we could see scenario four play out, which is something like this from this lower line in the sand here and continuation to the downside. Obviously, that would be extreme, something, be majorly shifting in this market. So that's really not something that we're paying attention to heavily. It is an option if it does manifest itself. We have to be prepared for the randomness of the market sometimes, but overall, this upper line in the sand is our main line in the sand for the session. Scenario one holding above, scenario two breaking down below it. Then we get down to our lower line in the sand here in scenario three, holding above it, and then scenario four breaking down below it. And that's the general pathways that we have there for our DMI today. Remember to monitor these neutral areas for inflections and continuations to the upside if we are holding above this upper neutral, or I'm sorry, this upper bullish line in the sand. Okay? So trade well, mind your risk, and have a great trading day.